Good morning. .30 news. We're pretty much clear for the rest of the day. Have the potential for a big trend day today. Clear of news. So you know it's looking pretty smooth. Started a new combine. Let's see.
Straight up, they said it. Like, we're just going to grow. Growth matters more. We're going to pump all the things to run. But when it's
What an unfortunate day that was. Have this new mantra. I'm gonna read out. I am a winner, but I recognize and respect that I have the potential to lose a lot of money today. That's why I will make my today's number one priority to not lose more than $500, which is my defined maximum risk. My only job is to manage risk and allow my profits to take care of themselves. The market is irrational and unpredictable. By staying humble, I respect the market today, no matter how good or bad yesterday was. One day can't make me rich, but one day can make me poor. One day at a time. How's that for a new mantra? How's that? Trading prep. So, trading prep, we already put that out. I only want to trade ES. MNQ just be moving like crazy sometimes. Mr. Below. So I really want to pay attention to the volume on ES today. I want to see, is there a lot of harmony in one direction? Do we break out of this range? And are we trending in that direction? So I want to see increase in trend strength. I want to see harmony in volume. Right now we have the buyers and we're slowly, looks like we're accumulating in upwards fashion for new highs. So can we make some new highs today? I'm not like set in stone on this bias, but we'll see what happens with the volume, because we know our system. We just want to see how the volume is going to look. So from this Sunday, have room to go lower, but can also just make more new highs. We'll see what happens. See how it goes.
Where BTC has been also up, not quite as clean, but
Bitcoin. Wake up every morning and say GM.
Jim. Silver. Welcome to the third episode of Silver Levels. Welcome to the rest of your life, where all we do is look at silver, because it's never going to stop going up. It's just going to be the most relevant asset forever. Everything's about silver. I dream of silver. I also meme of silver. The silver meme is a fucking banger though. That's the best. Anyway, not going to talk about silver. Well, kind of am. Don't short stuff that's at all-time highs. Just daily reminder. I guess I'll do a daily check-in. Daily reminder. Don't short things that keep making new highs. Just good piece of advice, long-term. And don't try and hero top it. Same as gold. If you saw the end of the review last night, did a video version, worth checking out for sure. Deep dived into USDC. I'll talk about that a little bit now. Also covered the earnings reports. And this very clear low off top that we are coming into. Or let's call it a parabolic move. Careful with our words, because blow off top implies a top. And that doesn't mean it has topped. A parabolic move will eventually top. And then afterwards we can call it a blow off top. Important to say that though, because, study history and look at any of these moves. This would have been considered to be getting parabolic in August 2011. After it's moving up, breaks away from the bands, and it still went a little higher. Last 5 or 6 days, then it topped. But this is key. Another thing you're going to see as well, I think, with gold and silver when they do top, I think it's going to happen over a weekend with a gap. That will cause most damage. That would seem most likely. Because during the week, from Sunday night, CME open, until Friday night, you've got futures open at all times, even if spot markets are not open, or ETFs are not trading, like GLD, or the main physical markets are not in session. And I think that when you see them top, they'll start with a gap, and that will be probably over a weekend. So let's just say, for example, gold closes here, and in fact, it'd be more important, or it'd be more impactful that you'd see it on like GLD, because this only trades during the session. So this just trades during New York session. You can see the pre-market is up, right? So you do have these pre-market hours where it trades 2 or 3 hours post close, and then for 2 or 3 hours pre-open. Anything in white is the New York session itself. But it's probably got a bit of volume now, but that's very much like the ES and NQ. These pre and post market hours, they're tradable, but the volume's so low that nothing really serious can be transacted. So the gaps matter, right? Where it opens, where it closes, and the sessions. So this will be a note of caution to bulls, obviously. This is pretty much what I think is going to happen. And this, by the way, happened from a Monday into a Tuesday. So the difference there is, if you look at GLD and you look at, I'll come back to this in a moment, rant loading, and you look at GC back at the same time when we had this top. So what happens here, let's say you're long gold ETF GLD, and you're not able to hedge it on the futures or trade in the futures or whatever, which is how a lot of retail will have to play it. They're not going to be able to access the futures as well. They might just be buying shares of GLD. This is just, when you hear people talk about paper gold, that's what this is. Anything that is not physical gold is paper gold. Same as silver, same as Bitcoin. Anything that's not Bitcoin that you have in your wallet, especially in your own wallet, self-custody, is paper. Even if you've got spot Bitcoin on an exchange, on Coinbase, that's theirs. Or on Binance or Bybit, it's all the same. That's theirs until you withdraw it. And of course, if you trade perps, that's just a derivative contract. If you trade options, if you trade Bitcoin ETF, that's paper, it's not real. They are meant to hold real Bitcoin, matching 1-to-1 for the amount of BTC that's owned through the ETF, just like gold is. That's what GLD is. GLD is like IBIT. It's the exact same function. They sell shares. You can buy shares, put them into your retirement account, put them into your personal account, whatever, leave them with your fucking investment manager, trade them with, or put them into your own brokerage account, just like you would with any shares or stocks. And if you're buying shares in GLD, the underlying assumption is that the issuer is holding physical gold, 1-to-1 backing it. But you don't have gold, you have a number on the screen in a brokerage account that says I've got X number of shares of GLD. Now, unless the gold isn't actually there or the silver isn't actually there, this is all going to be fine. There's a lot of talk, there's a lot of conspiracy theories, which oftentimes just means that people are right early. But I don't think that this talk about the fact that there's not actually enough gold and there's not enough silver, there's not enough gold, there's not enough silver, it's all paper, that people own GLD or they own SLV silver ETF, it's not actually backed because nobody proves reserves, which by the way is true. Like Fort Knox doesn't get audited. Not really a clear way to know how much actual physical gold there is in the world if everybody decided they want to take delivery of it or redeem or whatever. But that creates a greater risk which won't be allowed to happen, because all that matters here is if you want to sell, let's say, your GLD, it's not about whether there's actual enough gold there, it's about when you decide to sell it, do you get dollars? That's what you sell it into. You don't sell GLD into gold, you sell it into dollars. So even if it wasn't backed, or even if there were issues or holes, that would just require some kind of bailout, or they would have to eat it. The issuers would have to just eat that loss, because the US financial markets are the largest, most liquid, most trusted globally. You could not have nothing's impossible, but it would destroy the entire financial system, basically, if it turned out that there was not enough there. It'd be like the equivalent of a bank run, but on these assets, these ETFs that are supposed to have the assets backing them. So I think they would just, even if it were true that there wasn't enough gold and that's why the prices dislocate or whatever, they would just backstop it. They would make sure that people get their dollars Again, you're not getting gold for this. If you are trading gold futures, you can take delivery. That's the point. That's what futures contracts are for. Futures contracts have a date at which they expire in the future, hence the name. And you are paying the price. If you're getting long the futures, you're locking in that price. So if you bought GC or if you bought gold, whichever contract's about to change as well, switching on Thursday today, right? So switching from the February contract to April. But let's just say you buy the April contract, and which actually, let me look at the April contract now because that's going to be the primary one. GC, when you just click GC and it goes up as GC1 exclamation mark, that's usually the front end contract. But when it's switching over, you be mindful just that you're watching the right one, because when the February contract is no longer being traded, it'll switch to the April one. Yeah. So it's 5553 5554. So just double check that the April one is, yeah. So it's the April one. So that seems fine, because if we look at the February one, it's probably, yeah, there we go. The February one's different. So you want to be looking now at, and it has updated. That's all good. So you can take delivery. You can choose to. If it's 4,700 and you buy it, and then the contract expires, and it's at 55.40, you can take delivery of the physical gold, and you pay 4,800 for it. So obviously the difference is your profit. That's the nature of a futures contract. You're locking in that price. It goes both ways, of course. If you buy it and it goes down, you've bought something that you take delivery of that's worth less. But in reality, most people don't do that. Most people roll the contracts or close them. Most people use this to trade or to hedge. Futures markets, when they originated, were primarily for hedging, and it comes from commodities. It comes from, first, farmers, grain, beef, things like that. But mostly grain and seasonal harvest type staples for people's the diet, like grain and corn and fucking soybeans and all that. Where bad weather can affect things. So if they have a harvest, the harvest could be good, the harvest could be bad. So they introduced futures contracts, futures markets, so that they could offset that. They could go and sell ahead of time. They know they're going to produce whatever, however many bushels of wheat. If you've read Reminiscences of a Stock Operator, the old book, you'll know this. But they can go and sell the future contract. They know that they should be producing X amount of wheat. Let's just say it. I don't know the exact weights and measures, but let's say the typical harvest is 10,000 bushels of wheat. And wheat's trading at $10 right now in the futures market. You could lock that in. So you could sell, if you think that you're going to get your 10,000 or whatever, you could sell that in the futures market. And then the idea of that would be you're locking in that $10 price. If your harvest is in September and it's now April, the risk between April and September is that something can go wrong weather-wise, or even that something could go right, I guess in this case, where the price would go down. So if it was trading at 10, and the expectation was that there was going to be like a bumper harvest and abundant amount of wheat, that's going to be more supply. So the price will actually fall. If there was the opposite, if there was like a blight, if there was a problem, if there was like a weak harvest, prices would rise. If there's freezing temperatures and things like that, if there's floods, blah, 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 blah. So that's what futures markets are for, or were for originally. Now they've morphed into places to speculate, naturally, and mostly. And that's a lot of the driver of this move is that for years, and still predominantly, the futures markets are used to either speculate or hedge. So people bet directionally on price, or they hedge against either physical that they do have. They might, it could be large institutions or firms, or even on a nation state level, countries, whatever. Or any big investor trader who has a lot of physical gold that they're holding, and when price gets to certain levels, they may hedge that for the downside. Because they're holding the physical, they don't want to sell the physical, because that's slow and cumbersome, and you might end up getting a worse price. If you're trying to get rid of it, you have to find a buyer, or you can just short the futures. And if you're right and you hedge it correctly, you can protect yourself from the downside, and so on and so on. Anyway, so the gaps, I think, will come probably over a weekend, but it could really be at any time. I think that's how it will top, though. You'll see a gap where anyone who was in GLD on Monday was buying it at 400. The next day, it opened at 386 and straight down. So they're immediately trapped, and that top forms that way. So the longs don't get a chance to get out. And anyone trading, of course, options on that, short-dated options, calls, is getting crushed and wrecked. And that's very often why it does also then come back for a retest, whether it's to go up further or even whether it's to go down after. You'll often see those retests come. The first move will take out people that are in bad position, like a gap here where gold topped out in 2020. From Monday to Tuesday, it dropped from 190 all the way to 183. but then a few days later come back up to right around the level it was at before retest. So retest, these gaps happen for partially that reason. The first move down takes out people that are badly positioned in the blow off move, and then you get some kind of retest consolidation. Of course, in that case, that was the top. Some cases it's like we just seen there, where it's not the top, it's just a temporary pause before we go higher. So that's what I'll be watching out for, gaps. I think one of these days, whenever it tops, you'll see it open significantly lower and continue lower, and then I'll be watching those prices come back for retests of that. Same for silver. Silver moving higher, pre-market is at new highs. Don't short things at new highs. Pretty simple. Same thing. And there's still mostly anger. Most people are not actually happy about this when you see them online because they don't own physical. Especially that a lot of the younger generation and the internet generation, of course, has been memeing gold and silver for years and owns Bitcoin, and they hold Bitcoin or other things, and that's not up and these are up, so they're angry about it. And so they're either going into one of two camps. They're trying to short it, saying it's up too high. Just do not do that. Wait until the break. Wait until there's a sign of a market structure break. Wait until your system will give you a setup to short it if you're going to short it. If you don't trade silver or gold, don't trade them. Or they go into the other camp which just says, well, I've missed this move, this move's up, so because I've missed it, it must be up too much, which is just hubris, it's arrogance, and it's delusional. So because I missed the trade, it's got to be too high. Because I missed the trade, everyone else is going to get wrecked. And next, it's going to rotate into XYZ. Insert whatever your bags are, is where the rotation is going to go. And that's why I've talked about, I don't think the rotation is going to go from gold and silver into Bitcoin right away. It doesn't make sense as an immediate thing because the factors driving them, the physical demand, it's not the same as the monetary debasement thing, which will drive and help Bitcoin over time. And I think Bitcoin goes up and does well, does really well. There's been some talk recently, which I agree with, and I disagree with in sort of equal measure. So a couple of things to cover here. Bitcoin went first. If this is a debasement trade, and it's pricing in, so all a debasement trade is just pricing in the depreciation of the currency. So the dollar is going to debase, the dollar is going to get weaker, the pound is going to get printed, the euro is going to get printed, the fucking yen. They're going to print, people's purchasing power will erode, so you want to buy a hedge or that, you buy gold, you buy Bitcoin, whatever. And Bitcoin did do that already. And again, this goes into the camp of whether you missed this trade or not, Bitcoin is up more than gold from the lows of 2022. And so even at this point, if you go back to the November lows, where both bottomed, that's why it is. The part I don't like about this kind of thing is that it's selective. You're selecting a specific time to measure the performance, which means obviously look at this. If you zoom out to May 21, gold has outperformed Bitcoin. But if you go from the bottom, and it was when both bottomed, October 2022, Bitcoin's bottom after FTX and gold's bottom, Bitcoin is still up more than gold. Now it should be, because it's much smaller, it's much more volatile, it's much riskier. But especially when it was at its peak, you can make the argument fairly that Bitcoin has already priced that in and now gold is catching up. Not that it's catching up to Bitcoin specifically, it's just that it's larger and slower moving and it takes a longer time to build. Bitcoin's more impulsive, it's more narrative driven, it's more internet generation, more popular. You had Trump, you had all that kind of stuff, you had ETFs, you had sailor buying, and it was positive, rising tide, lifts all boats, it drove the market higher, reflexivity, all that we've seen in 23, 24, 25, most of 25 until October. So that part's true. Right, the idea of Bitcoin underperforming gold is always about over which time frame, over which period of time. If you go from the lows of the bear market for Bitcoin, and which were the lows of gold as well, so it is selecting a point, but it's fair enough because it was also the last low in gold. What you don't want to do is select, with real bias, a point. If you zoom out far enough, Bitcoin's up 750,000%, and gold's up 489% since 2010. That kind of thing is not useful or helpful to anybody. Because obviously Bitcoin's up more, but that's because it's grown from zero and gold's been around for thousands of years. So what matters when you're looking at the performance is in context. So obviously our more recent context is that since Bitcoin's top in October, it's down significantly. Right? So when Bitcoin topped, it's down 27% at this point, gold's up 43%. Big outperformance. But again, that's also selective. You're selecting for the peak of Bitcoin after it had an 8x run from the lows of 2022, which gold has not had. Gold didn't go up 8x from the lows. That's why Bitcoin from the lows of November has outperformed, and gold from the 2022 lows is up 250%, give or take, which is 3.5x. And these are always, the reason I say is because this all gets shared and spread as if it's like super meaningful. You have to think about where does it really matter? If you're talking debasement, There's 2 points that are fair to the two fairest points to measure from are COVID and 2008. Can't use 2008 because Bitcoin didn't exist. The reason 2008 and 2009 matters is because that's when we had the GFC, the housing market collapse. You all know about it, right? Big Short, all that. That's when they started QE. That's when the money printers went burr, and they fucking burred all the way to 2022. But they accelerated after COVID. After COVID, it went just haywire, where money supply increase was ridiculous. If you look at I guess US M2, right? If you look at M2 money supply, it was COVID. So, like I said, from 2008, money supply is always increasing. That's just the nature of fiat. But post, really 09, right after 08, they stimulated, and at that time I think it was it was initially less than $1 trillion, believe it or not. But then over the preceding years, or the following years, from 09 to 2020, money supply increased from 7 to 15, so it doubled. Then, in a very short space of time, it went from 15 trillion to 21 trillion, which is another 50% up. But that happened in a matter of a year, just over a year, about a year and a half. And the money supply keeps going higher and higher. People are like, why is Bitcoin not higher? Because the money supply does go higher. Like, it grinds, drifts, goes higher and higher and higher. Like, and it's in the same kind of upwards slope, right, rate of change. The rate of change was so rapid here that it drove every asset insane, because you get this big spike. That didn't happen coming out of 08, 09, 2010, 2011. If you look at that compared to the stock market, right, from 09 to 2020, stock market's another good proxy for that. From 09 to 2020, what you see is this. There's 09 and there's 2020. Right, it's not some crazy massive bull run. It is obviously a bull market. It's a bull run the whole way. It makes new highs in 2013. They started printing in 09, like really print. They started straight up QE in 09, or 08 response, and then through 09 and all the way through. So the first 4 years was just getting back to the highs. So then you break out, then you're actually at new highs. That's when you're actually marking up. And it's not blow off top craziness. It's just up and dips keep on up and up and up until you get into COVID. And that's when it accelerates with the accelerated printing. Now we see the markets higher, obviously driven mostly by the wave of AI and everything else, this investment, the new bull run that we're in. But if you look at gold at the same time, the gold from 09 reacted first and fastest. So as soon as it started printing money, what happens? Gold goes parabolic, rips. But just for 3 years, 2011, and then it stalls. Comes actually all the way back to the 08 levels, builds a nice base, and goes off from here. So when the printers go on and the debasement starts, gold prices it in usually faster, quicker, and tops out sooner, because it's much more reflexive in that way. Supply, demand, the dynamics are different of that versus like a broad stock market. And so when you're looking at something like that Bitcoin and gold comparison of, if you're looking just purely at monetary hedge, COVID would be the spot to look at. Where were they during COVID and when the printers went on in March 2020? And it's clear, Bitcoin's up 1,000%, gold is up 250%. So again, this is like, Bitcoin has been better, just has. Now, in context, was it as liquid? No. Could everyone buy it back then? Not really. Anyone technically could, but not enough size. It's not a reserve asset. It's not held by countries. There's different players who are accumulating it for different reasons and everything else. Volatility profile is different. But you do have to think about it from a long-term view. The whole point of Bitcoin is that long-term, Bitcoiners get rewarded for their low-time preference. Right? They're not trying to get rich quick, trying to protect themselves from the printers long-term. And that's what it has done. So now, inflation is not 1,000% in the last 5 years. It's up a lot, but things aren't 1,000% more expensive. That's why Bitcoin, if you bought it then, has protected you. But markets don't go in a straight line. So even like 2022, you still had a 78% decline. But then it came all the way back. We're in a decline phase now. And so gold's having its time. After a long, long, long period of underperforming, going sideways, it's now blasting higher, and it's pricing in a lot of this future debasement. And that can go for however long it needs to go. And that's the end of the comparison. Don't need to compare from here, because now you just want to look at it like a trend. Gold has a very strong trend that is accelerating and is steaming ahead towards 6,000 after just ripping straight through 5,000. Again, this is now in the parabolic phase. Respective trend holds the 10 and 20 week, holds them, rises. So from the breakout of 24, nice steady bit, rises. These moves up, consolidate. Now it's really running away. It did it September to October of 25, where it marks up and trends strong, stays well above the bands, but more slowly. This was 8 weeks or so. Each of those weeks are pretty small, so we got a couple of big ones, and that topped it out. it wasn't really overextended, where it could have a pullback, still into the band, still hold fine. Now you're seeing like historic moves in gold. You're seeing 10% this week, and because of the higher price and higher market cap, that's the biggest move ever in market cap terms and in dollar terms. Of course, it's up $550 just this week, which is the biggest it's ever been. But be mindful when people say that kind of stuff as well. That's because price is higher. Right? For gold to rise $500 now, that's 10%. If gold was rising $500 whenever it's 1,000, if it rises from 1,000 to 1,500, that's 50%. That's a much bigger increase. So you have to remember percentage terms as well as just dollar terms. But the thing to watch for now is the respective trend and how, if and when it slows or tops, how does it come back into its pullback? What you want to see, obviously, is that it holds. This is like an impulsive breakout, and you really just need to see the same thing again, where it does pull back, but not deep. Right? Pulls back, maybe retraces a good bit of this week, and I'm not saying it's going to top now. This is just hypothetical, but you want to see it not retrace much of the prior leg. If you take your legs and do something simple as fib retracement, just from here to here, it pulls back less than 50%. Or if you go from the lowest point, swing low, same thing, pulls back 40%, rather than like a full retrace of the prior leg, which is one of your signs of a top. If you look at this top of gold in 2011, there's your swing low, there's your high. What happens? 80%, 85% pullback. What does that lead to? That's trend exhaustion. The moves before that weren't doing that. That's how it tops. That slowed it. That meant it was no longer trending. So it's either going to consolidate to go higher, or it's going to top. Contrast that with the moves before. The moves before, low up to the high, less than a 50% pullback. Simple stuff. Low up to the high, less than a 50% pullback. Nice consolidation. That's how it holds the bands. That's how it makes higher highs and higher lows without this blow off top type of action. And so gold could be here, it could be here, it could be here. You have to wait. Just get your high time frame view. You've got your most recent low, and this made a new high, set a new low, and we've ripped it here. So I would just be watching this on the weekly. If gold pulls back, does it pull back beyond half of the swing leg? Does it pull back more than 50%? If so, you could be looking at a proper top. If not, it could just be consolidation and take a few months, build itself and go higher. Same thing for silver, same thing for any asset you trade. So that's what you want to be watching from those higher time frame views. If you look at silver and just mark the same thing, silver's last leg started all the way over here, just go to the last red candle and just keep moving that. Right? As silver makes new highs, just keep moving that until you find it at whatever the swing high ends up being, and see where does the weekly pullback come. It's weekly, it takes time. It's going to take multiple weeks for that to play itself out, and it's probably going to be a retest. So if you are a trader of it on a higher time frame, you got to look at that from a higher time frame context. So that's enough metals for today. USDC. So I won't go really deep on this because I covered it in pretty great depth last night on the end of day recap. So again, check that video and just scroll through until you find the part where I start talking about USDC. Broke down all the reason and the mechanism behind this, and it's been a big contributor to Bitcoin's recent downtrend. It's also been what's driven this Coinbase negative premium that's persisting and getting deeper, as there's less liquidity in USDC, which is the primary stablecoin for for Coinbase and in the US, and it's all mostly been driven by the delays of regulations in the US for stablecoins, the Clarity Act. Again, talked about all that already, so I won't repeat it. But what I'm continuing to watch is this. As we've seen, the redemptions of USDC, where the market cap has dropped from a peak of 78 billion back in December, it's down to 71 billion. So about 7 billion has come out. First slowly, but then sharply. So from Monday of last week, in the last 10 days, we've seen 5 billion come off, 76 down to 71. And you can see that with the Bitcoin chart, how it's down as well from those highs of the weekend before. And these are redemptions, and they keep coming in. This is people taking their USDC and getting it out. So they're redeeming it for dollars. That takes money out of the crypto system and back into the fiat system, which mostly is going to be taking it away because there's a possibility they won't be able to earn yield on it by holding it in Coinbase and other places where they could get 4 or 5%. So if they think that might not happen, because that's one of the things that's trying to be blocked with this legislation, the banks are lobbying to block it, then some of these investors will take their USDC and say, no, too much risk there, might not happen, redeem it, get my dollars, and just buy treasuries. Just go into the TradFi system and buy treasuries straight and get your 4 or 5% that way. And each of these drops, this was Monday at 11 p.m, Tuesday, just before New York, Tuesday night, 11 p.m. as well, Wednesday, 1 p.m, and Wednesday, 11 p.m. So I think this is because it seems like, at least, I don't know the full mechanism behind it, but it seems like Circle do the redemptions twice a day. Seems to be the logic. Because it's at 11 p.m. UTC, and then 1 p.m., and then 11 p.m., and then 1 p.m., and then 11 p.m. And we're coming up to 1 p.m. right now. So I would guess that that's not random. I think that's probably when they do it. You know, it's company. If people are wanting to redeem, they're not just going to redeem like instantly. They probably do it a couple of times a day, which seems like they do it 1 hour before the UTC close, and they also do it around lunchtime in UTC, which is just before New York session. And the last one was last night. It was before I streamed, and it was coming into the end of the trading day. So looking at Bitcoin at that time. And this doesn't have to necessarily like directly correlate to Bitcoin's price, but it has of course been a drag on the market. And we saw that latest drop at 11, where it went down from 71.5 to 71.25. So somebody has redeemed, or in total, there's been another 250 million of redemptions that have come out of USDC and back into fiat. Forget the bans here, by the way. That should just be I just have them on because they're on. They don't mean it. It's not like we're following the trend, waiting for market structure break or whatever. Just watching more so, do these redemptions continue? And how does that drag on price? I broke that all down last night, as prices is being dragged down by that, plus other factors. The fact that Bitcoin is just not trending, and it's not in a trending state. On trade of the day, I'll go from a short and long from yesterday. Yesterday, as we pushed up into the Fed meeting, yesterday. It feels like a week ago. It was literally like 12 hours ago, the Fed meeting, 18 hours ago. Yesterday, the Fed meeting, and going into it during the day, the level for Bitcoin to close above was 89.5. That's that important level, because that's the daily close market structure. And during the day, we were at that level. So if I actually get this and just mark it off, your highest daily level there, about 89.5. That's your last daily high. That'll be your daily market structure. And intraday, we pushed up into it. So Tuesday, pushed up to it. Wednesday, broke through it, going into New York session, then sold off. Then going into the Fed meeting, we sold back below it, rejected it. And at the close, it closed below. So we didn't get a daily market structure break. And off the open, we've continued lower. We're back down now towards the yearly open, which is at 87.5 here. And that's the levels that we're trading between. We've also had we have options expiry coming up for tomorrow. Terabit options expiry, the monthly expiry, which has 8 billion of notional. So the monthlies are always important. Even like dailies, weeklies matter, but monthlies are the big ones, and then quarterly, which is March, June, September, December, are the biggest. But January is obviously very important. And the strikes have talked about 90k. Right? So 90k during the week was the main level to watch. Both puts and calls. So there was a call, one put one, but as we came up into it, if price is going to expire on Friday, which is tomorrow, and it's 8 a.m. that Deribit OPEX happens, 8 a.m. We come up to 90, touched it, rejected it. So price is going to stay below 90 until tomorrow at 8 a.m. That I'm pretty sure of. Nothing certain, but it seems like that's fairly locked in. The question then would be 88. That 88k level for OPEX is an interesting one, because that's right where we're at here. And we do have some open interest there. At 88, there's, again, the next big level is 85, where there's a relatively large at least, put open interest. But 88, 89 doesn't have much. 88 does have some puts and calls, more puts. If we stay below that, that would mean they will be in profit. Obviously time decay matters as well, but the pinning effect, if it stays below 88 and can't hold the yearly open, then 85, which is still quite a bit away. I don't know if we'll get there today or even tomorrow, but 85, I would say, is the level that we would not go below before tomorrow's expiry. That's less than a day away. So you've got 88, you've got 87 and 86. It's always the round numbers or clusters. And they're all pretty much the same. 88's got the most, so it's the one worth watching. 87 and 86 are important as well. And 85, if price goes below that, that's going to put a lot of put options into profit, at least theoretically. Again, you have to factor in the time decay, but when you come into these options, monthly expiries, I look at them very simply, support and resistance. So if we're below 88, watch for sell-off lower. And then yearly open is that level that matters, of course. It's a big number. It's the opening price for the year. We moved up at the start of the year, we had our first trend, we came back, we held the yearly open, we did below it, we tried to reclaim it. Doesn't seem to be a strong support, at least. It held, but then we got below it, and we kind of chopped around it, got above, but only got to 90, rejected back, it's coming down into it, looks like it's going to test it at least today. So I'll be watching there what happens if we lose the yearly open. Do we extend below it and start to trade down? Because we've had all of January barring a few days, we've had all of January trading above the early open, and which is also the monthly open. We're coming at the end of the month, so we'll see how that goes if we drop down through that level. And for today, I'll be watching that yearly open, then 87, 86, and if it does break Monday's low, then I'd watch 85. And I'd expect 85. This would be in the scenario where we get a proper sell-off. I'm not saying it's going to happen, although directionally there is some downside momentum. I would imagine 85 holds if we were to drop there until at least tomorrow's expiry. And anything that holds to the upside, again, because of 88 having some more puts than calls, it's also possible the pinning could keep us above 88. Just because we're below it now doesn't mean it will stay there. If we get back above it and stay above until expiry, then that keeps it pinned above that level. It will stay above or below 88. Whether it will extend, that's the thing. As you get closer to expiry, you can often see compression. It really gets lower and lower volatility, and price stops moving as it has that. That's what that pinning effect really is the price gets above a level or below a level, depending on which way the dealers are hedging it and trying to hold it. And if it stays there, then you won't see much movement until after 8 a.m. Before that, we've got New York session. So the catalyst really would be, do we see in the session today any strong flows? Do we see strong buying or selling off of the New York Open? Since the daily open, we've had an impulse down and we're correcting, and we've got a 1 hour downtrend in progress back into prior support. So we've reverted that full move. It's looking less like an uptrend now. It previously was making some higher highs and higher lows. Seems to now be moving more back into a mean reverting state. But if we start to chop around 88, and especially if we get back above it and hold, I think we'll stay between 88 and 89 until tomorrow. So if price reclaims, I think 89 will be as high as it goes. It wouldn't go below 88. It stays there till expiry. And same thing to the downside. Either we just stay below it and hold with low volatility, or if yearly open breaks, that's going to be watching for a potential downside move. You look at 87 and lower. Question really is just, does volatility compress? Do we just go sideways to expiry, or do we see some directional movement? And with that would be, are there these further redemptions of USDC? Do we see that continuation of money flowing out, which is a temporary negative drag on the market? The other big thing, well, in the stock market, we have SPY and QQQ. So touched on these last night as well. It's just the same again. Makes all-time high, but doesn't extend beyond it. So no clear, clean breakout yet. I want to see SPY break, hold, and close above 700. That would be a proper breakout, where then I'll be watching for pullback into the 10-day EMA initially to see if we can have one of these proper markups where it actually breaks away and starts to do the slow, steady markup where it's actually moving higher consistently rather than more sideways as it has been. For that to fail, you're looking at the same thing we've seen over and over, which is that these pushes to the highs don't have follow through. And to me, that would be back below the structure from Thursday and Friday of last week, this cluster here around 690, which would also take it below its 10 and 20 bands. And if we start to fall into that area there, then there's potential for a pullback towards the lows. And really it's just all about kind of break, hold, and stay up and stay up and stay up and stay up and stay up. Can we start marking up, or is it more consolidation or a pullback yet to come? QQQ, much more of a factor now, because now we're at the point where the Nasdaq is after months of being unable to break 630, and it's been staying below this. So initially it was staying in this resistance area from the highs of October and rejecting off of 627 and 628 and basically not being able to crack 630, and then it did. Close through it. Yesterday was red, but we still stayed higher, still moving higher. Pre-market, as you can see there, we're trading right around the same as we closed that. So flat going into the session. Tuesday's close there on the lower time. Frames. is one to watch. Tuesday's New York close. You got that move up Wednesday. We got tech earnings, and you got those earnings for Meta, which had a strong reaction. Everything dropped first. So the first move off of Meta and Tesla and Microsoft was all down, spikes down, but then very strong reaction to the upside. And for Meta so far, it's held it in the overnight and held it as well in the pre-session. So during New York session today, we'll see if that can maintain and start to push higher, which then on the daily is going to look like a really nice move, because pre-market is trading all the way up back into its gaps from above, which is the prior highs before the tariff sell-off. This wick is not, I've said it, I've seen this wick is not, I think this is a trading view glitch. I don't see that on any broker where it actually traded, and so I would just look at it from this perspective, just take the candles off. As of right now, Meta's going to open there. It's going to be a significant gap higher from the daily close to today's open. Just like we had this huge gap down back in when it last reported earnings, back in October. That led to an immediate continuation lower and then a consolidation. After today's open, it's going to open with some kind of gap. It's only an hour and a half until the session opens. So we're going to open gap higher for sure. And really the question there is, does that get sold back down into the gap, or do we see it consolidate and hold? Because it's coming into resistance now. It's going to be a fill of the prior gap. Prior gap coming from about 750, trading about 725. And what it needs to do from here is consolidate and then put in a good weekly close. So you want to start zooming out on Meta and looking at the weekly. Because on a weekly,
if this candle closes
700
below these lows, bearish,
highs, you still got
could
that
enter a short right
the
off
highs
of
start
market
September,
open.
October. But you'll have reclaimed your 50 week with a nice double bottom, FTR technically, higher low. And you'll be in a position where if it consolidates, the weekly bands are going to cross green again. It's going to start sloping upwards. You can see it start building its way through,
as well.
where it may be building a base. If it opens here, it could move up, back down, up, down, up, down, and break out later on. You might see this nice consolidation at the highs before a breakout, which I don't think is going to be imminent. I could see it running to the highs over the next few weeks, but to break out, clear new highs, and mark up to 900 or whatever, probably has to test the highs, pull back, consolidate before a breakout. Tesla did the same, but a little bit weaker in its overall move, in that it spiked lower, spiked higher really quickly, and retraced most of it. So it's more likely to just stay in consolidation where it is, as there's no clear gap. So Meta is gapping way above its prior consolidation. Tesla's going to open basically mid-range, so in the middle of this consolidation it's been in since the sell-off at the start of the year. It's still got below the 50, below the bands. It's opening right around that. So a good week for Tesla would be closing the week above 450, would be really good. Any closes up there would start to give it a base where it's back above the 50, back above the bands, and on the weekly that would look like a reclaim of the bands. If it can close above last week's high in particular, that'd be a good start. I would set it up pretty nicely for a move towards the highs and really building this base through where it could kick on from later in the year. And Microsoft is an interesting one because it looks great here on the weekly, but don't forget the pre-market. So it's given up all those gains. It rallied into earnings, into the weekly bands, had reclaimed, or was on track to reclaim the 50 week, and on track to reclaim the highs pre-tariff sell-off from 2025. But overnight it got cooked. Absolutely. Just the pre-earnings rally just got completely obliterated and sold into. And earnings were good. It met earnings, it didn't miss, it was fine. So this is just classic positioning. This is why good news earnings does not equal price up. If it's been front ran, if positioning is offside, you can see the opposite. So again, from a daily perspective, you have to imagine this now with the gap, and this is what wrecks options traders and even any trader, but anyone trading lower time frames or shorter term that was getting long going into Tuesday or Wednesday in the 470s, 480s. It's going to open at 448, so they're going to take a significant loss or a drawdown immediately. So if you're long from there, it's going to open here, and this is the gap risk. Right? If you wanted to be long, as many people do, and you're getting long here, you really want to have your stop loss at like opens here, holds the 100, gets back above the 50, like a 4, and Apple needs to reclaim it, or I'm sure everyone will vote in it, or suppose higher, and you've got like Adobe, same as well. These ones are getting disrupted by, or supposedly disrupted by, the growth of LLMs and the negative effect that can have on SaaS companies, software as a service, either corporate or consumer. And this is where will be great places to buy. Bottoms out, starts to move up. That's getting to. It's not just getting That's running again. This was also a really nice consolidation. I see that big downwards wick. Okay, here we go. When is it? 27 days. 20. There was a break of structure here, 15-minute, entered a short, expecting momentum follow through. That did not come. It moved back up, stopped me out, but then on the reversal gave a re-entry, so I re-entered. And then throughout the close, or going into the close, we saw continued weakness, break of structure off the daily open, and added to the position there, moved the stop down to the point of control of yesterday's, or of this consolidation range. And actually, let me just get this correct, because our break of structure was here. Let me just drag it. There we go. Same POC. Right around 89.5. I talked about that level. Talk about the importance of it. It's on daily levels. It's the daily market structure. That's Bitcoin's last daily high on a closed basis. There. It's also into the bands, which are projected straight down off the open. Let's say, coming into sitting in this position, it's obviously in profit, and it's been added to, so it's pyramided. It's a larger size now. Still just 1 hour of risk, but I've moved the stop down and added to the position. So as it sits at the moment, this is where we're at. How am I following this? I'm following it based on market structure, as always. But going into tomorrow, we have, as I touched on daily levels, we've got the options expiry, we've got the yearly open as support at the moment. We've got 88k, which price may stay above and pin. So what I'm looking for going into New York session is how does price move in relation to 88. If we get above it and start to hold, it's likely going to stay above that till Friday's expiry. 89, I don't think price should be able to reach and break that if the reversal is still in play. So just to be clear on this, because of the way it's set up, just so you know, the average entry is 89.2. So that's entry 1, that's entry 2. The average of them is 89.2. I'll put it exactly 89.2 GM. So if you take it as a combined position, this is where it's currently sitting at. It's currently sitting at about 4.5 hour in profit. And I'm happy to hold that until we see, currently, we have the first leg of a 1 hour downtrend in play. We come up to 90, we top, we distribute, we mark down, consolidating after markdown, bands are red, below the 50. Now it is into support. That's always the thing to watch for.
4 minutes left.
This level needs to break. It's pretty simple.
We close bearish.
Price needs to break 87.5.
The bearish volume is in harmony for shorts.
Yearly open right around these prior lows. Break and hold. An hourly close below that would open up the door for 87 and possibly 86. And if it can't, then I'm watching to see, again, with structure, does it form the beginnings of a reversal, which at this stage would be reclaiming the bands in the 50 and getting, really the invalidation is the spot at the moment. It's much like the 4 hour swing trade I had going the other day, where the only clear invalidation on that short trade was right back where we ended up coming up to, and it got stopped out in that move, even though it didn't end up closing above it. That's obviously the risk, because to invalidate the short, it would have to close above 90.3, and it got to 90.5, but it didn't actually close and hold there. At this point in this current setup, it's the same thing. 89.5 would be the level it should not extend beyond.
Okay, we got 2 minutes left. We're gonna see how this candle closes. We might be shorting right at market open, so we're gonna have to see the last few seconds of this candle, because I'm looking for a bearish harmony. Market 15-minute breaks out of its range and closes, and we're trending to the downside. So that is our setup, and then we just let the market do its thing at that point, whether it's a win or a loss. Fucked if I know. All I can do is follow my process and follow my rules. So that's exactly what we're gonna wait and do. It's looking like it's gonna close below here bearish, and we can enter, and that's our trade. Come all the way to that mean of the VWAP for this market open, even to the lows. The setup is there for shorts. That's what I'm saying. If I have to reverse my bias, then I will. But what the market is showing me is that we're setting up for shorts right now. You got 1 minute left till market open. Seeing divergence in price. $50. Does this candle close bearish or bullish? That's what I'm waiting to see. Doesn't look like there's a lot of buyers in the market right now, but $15 doesn't look like it's gonna go bearish, but so we didn't close out of that range. Market is open. Market's pushing up. So you can see price is still in this range. We're not trading main reverting setup, we're trading our trend setup. So I want to see price break out to the lower side and close. Looks like that was a nice fib entry.
But 89 with the options pinning effect, I would expect to be a resistance if we are to get that high. If we're going to stay between 88 and 89, so if 88
No
is going to end
harmony
up
in
holding,
volume right now.
I think we can go as high as 89, but not above it, and not below 88, and we end up staying through there and closing
Big
there
wick
to Friday's
rejection from
expiry.
the upside. Could be making a strong push down. But we're gonna have to wait and close. There's a strong wick rejection though to the upside. It's at like that 720 level, which looks pretty good for shorts. But we're still in that range, so there's nothing really we can do. We can't really press any buttons. Trending is coming down. We're going to slowly enter that mean reverting stage. Price needs to be clear on what it wants to do for me to enter. And when it shows me that it's clearly going in a direction, then I will take that trade. But right now, it's like, it's wanting to go short, but it just hasn't quite confirmed it yet. So it's looking like it will, but the market is unpredictable. We have to see what happens. Even if we just come to the 7K level, there's room for downside. So if you guys can see what I'm seeing. We're making a push, trending strong, volume. I think I'm going to enter this here. Trending is rising. We're going to enter a short here.
Order filled.
Alright, we're in for shorts. We'll move stop to break even at 5 points. having that market break, strong wick rejection. This is a pretty good setup. Strong volume, trend is rising. We've broken that, so we're getting ready for this trend down. So now we just let the market do its thing. 5 points is right here. So we can just mark that out. We can move stop and break even at our 5 points here. Looks like we're gonna reach that 5 points. Boom, just like that, we're in a risk-free trade. The next 15 points is here, next 15 points is here. And then 25 points is here. Five, 15, 25. So I just want to make a fib tool. For like fib take profits. So like 75. 80. No. 65. 60. No. 67. 68. 69. 71. So 71 is like 5 points. That's 5 points. 0.5. But we will do this one. Take this off. Oh shit. 41, 2, 3, 42. And then we'll go 25, 10, 2, 4, 5. Just like that, 42 can be like So this is TP1, TP2, no, take this off. So kind of the idea is to take profits at like these full levels. So we trail take profit at these fib levels. The volume is looking good on this trade. Trend is increasing. We reached that 7K level. Move stop to break even. So hopefully we can continue our push down to like the 680 is our target. That's like the lower range of that VWAP. But we'll see how it performs. We have a candle close in the next 5 minutes. Guess we have more volume. We have news at 10 a.m. So we'll see where that puts us. Just want to see something quickly because I've been measuring this stuff. No. That's not what I want to do. I've been measuring the in your favor and against you. So I want to see like where's the optimal stop loss for like 40 trades right now. Huh? So they're saying 1 or 2 ticks. Most recent swing high, which is right here, which is already like 5 points. So we're already almost halfway there. We can just keep pushing. We can just keep pushing that P to our full take profit. Keep pushing P, baby. We started a new combine, so this full take profit would be half of it. Past challenge, which is pretty good for a Thursday. We're in that trending state, so I'm feeling pretty comfortable with this trade that it can definitely hit full take profit. It can even go more. And I'm not gonna be greedy because I don't know. It's not in my back test to like go for more. You know what I mean? I mean, unless I want to put it to like 0.14, like move this down, and when it hits here, move to 0.14. But the chances of giving back like those 5 points, just 250, I'd rather just secure it and, you know, keep what's mine. But price is looking good. We got a lot of strong volume. The trend is just increasing. Short right off market open. Min Q is reaching those lower levels. The VIX is pushing up with no signs of stopping, which we'd love to see. We got this. This is looking like a full TP day. We definitely got this. But I just can't do anything to interrupt my winners. I'm definitely watching the volume, watching strong volume. And we have news at 10 a.m. So I'm feeling like we should go for more. Because the news could just push us even lower. Right, we just don't know. Let me make this full screen. News can definitely, I think, push us lower. So we'll risk 5 points to go even lower. Is what I'm thinking. I'm gonna move stop to here when it hits our full take profit. We're gonna risk those 5 points to gain even more. And then let's say it goes another 5 points, then we'll move it there. Alright, so we hit it there. Let's go for more. So another 10 points is here. 10 points is here. How do I make this 0 negative? Negative 0.02. 1, 2. Is that 5 points? This is another 10 points. And then what, like every 5 points will go? So here's the next 5 points. And is that another 5 points?
Order filled.
Alright, full take profit. I tried this trail. It was another 5 points. It's kind of tough. But another full take profit day. And new on the fresh combine. That's beautiful. That's perfect. That's awesome. That's me for the day, boys. That's me. Okay, guys, I'm not trading no more. That's my motherfucking trading day. I'm just gonna let myself out. Secure them profits, secure them gains, make sure we journal our shit. or revert to recent lows again. Must wait for candle close 15-minute chart. Watch harmony and volume. Watch harmony and volume. Stay calm today. Stay calm today. This improves your trading. Hello?
Hey, Lamb, could you do me a favor?
Yeah.
Could you pull 3 spices out of the freezer
Okay.
and put them in the front, like on the front doorstep?
Okay.
Put them in bags though. But the guy's at the school getting watching his kid's concert, but he's just gonna grab them from the doorstep.
All right.
All right, 3 of them, spicy.
Okay, I'll go
Goodbye.
now. Damn. See? What did I say, bro? Price goes another 30 points. Big trend day. That's like 60 points right there. Because I cut my winner early. But I just, I knew. Like, my pre-market notes were like, bro, like, I don't know how I knew, but man, I just knew. I just knew. Okay, guys, so I don't know how I'm a motherfucking market wizard, but I knew it would be a big trend day. I knew price was gonna go like to even reach more levels. I should have just waited and like looked at my levels, but it's not in my back testing. I don't know. Like it's not. I haven't tested it 100 times. In order to trail my stop for more gains, it needs to be back tested at least 100 times. Right now, I just don't know exactly how to do it. So that's fine. I'll take my win today. We're cooking on this funded account. Up into balance each day. Should be at like what, like 3K now? So yeah, we're at 3K on the funded, and then 1.5 on the new combine. Which the big numbers don't matter because we really just risked 1R, and now we're up 6R, which is great because now we have lots of breathing room to continue to risk our 1R. But as for the day, I'm done trading. Just gonna add my pre-market notes because my pre-market notes were elite. Pre-market notes were on point today. We exited at what? The 45. If we reverse it, it comes back all the way up to the market open. Imagine, bro. Imagine that's the trade we took. Or freaking we wait for a reversal or divergence or a bottom or anything, and then we take it all the way back to market open, bro. Oh shit. Let me calm down. We're done trading, so we can celebrate a little bit. Let me just finish off my journal. What the heck? Just finish my journaling. Okay. Before we do that, we're going to summarize my trading for the day. No, let's use ChatGPT. Damn, today was a big trend day. I don't know how I knew this, bro. From being consistent. That reversal strat didn't work though. We're in 70 points. Anticipated a big trend day. Price could either make new highs or revert to recent lows, waiting for 15-minute candle close before confirming direction, focused on volume and harmony in price action. Reminder, stay calm, calmness improves decision making. Price is holding at the bottom of its range. Early on, a strong wick rejection from the upside, indicating demand. At 9:30, a strong wick in favor of the downside. Price broke big gain, trend 1 minute, you kept attention, volume floor, and blah, blah, blah. See, the volume and flow has not diverted at all whatsoever. The volume is still in harmony for short, so it's definitely a big trend day. Cut that winner a little bit too early. Well, that's fine. Price broke upward and began trend. Price broke downward. We went for shorts today. Telling you guys, these braids, bro, these braids are lucky. These braids just giving me blessings all around. Alright, that's it for me. I have some other work to do. I have some back testing to do today. some back testing to do. Let's see my checklist. Stretched. Okay, let's just focus on back testing. So I'm gonna end the stream here. It's a good day today. Every day is a good day, but you know. Alright guys, see you tomorrow for Friday. We'll see how Friday goes. Could be a mean reverting day because we had a huge trend day already, but we'll see how Friday goes. We don't bring any baggage into Friday. One clean trade. This is what the system is meant to do. I love trades like this, just super clean and just is to take profit just like that. Even if we entered here, bro, those are we'll work on it because letting our winners run another 6R is fucking strong. So I just don't have it back tested. I don't know exactly how to do it. So I'm just going to continue to stick with my original game plan and just build up the accounts. But it's definitely something that I will be working on and taking into consideration into the future. All right. See you guys tomorrow. Peace.